Hi, welcome back to CBSE Board Economics. I'm Saddam Hussain. I welcome you all. We have already discussed in the banking unit the functions of central bank. How is central bank different from commercial banks? Now, today we'll be discussing each function of the central bank in detail. We discussed central bank has 5 functions. Number 1 is issue of monetary authority, that is issue of currency notes. Number 2, banker of the government. Number 3, banker's bank. Number 4, a lender of the last resort. And number 5, custodian of the foreign exchange. And the last point is monetary policy, credit control and credit expansion. Today we discuss the first function of the central bank, that is monetary authority, issue of currency authority. So this is the first function of the central bank, issue of currency authority. What it means, we discussed when we were differentiate between central bank and the commercial bank. The most important difference between the central bank and the commercial banks is that central bank is the only bank in the country that issues currency. Commercial banks don't have that power. Currency in the sense it can be currency notes, coins, everything in the country. There may be 2,000 rupee notes, 1,000 rupee, whatever the currency we have, it's the sole responsibility of the central bank to issue currency. Commercial banks can't do that. They can, at the most, the commercial banks create credit. Let's see. That is issue of currency authority. We see the points one by one. What it means here, issue of currency, sole authority of issue of currency. Central bank is the only bank in the country that issues currency in the economy. All currency notes. It can be 2,000 rupee notes, it can be 500 rupee note, it can be 100 rupee notes, it can be 200, it can be 500, 2,000. And small notes including 20 rupees, 10 rupees. All the currency notes are issued by the central bank. The central bank only issues them. The coins, though they are issued by the Ministry of Finance, coins are issued by the Ministry of Finance, but ultimately the circulation of even the coins, 1 rupee coin, maybe 50 paise coin, 2 rupee coin, 5 rupee coins, only the central bank puts into circulation. It means the entire currency of the country comes from the central bank. So that is why sole authority, that is the only bank in the country of issue of currency. That's why it's legal tender. Legal tender is issued by the government. It has legal implication. That means the government will take the responsibility for this currency. Sole authority of issue of currency lies with the central bank. That's the most important under issue of currency. Central bank is the only bank in the country that issues currency notes and coins. So relating to this point here, monopoly over currency. It has monopoly over currency. No other bank can issue currency in the economy. No commercial banks, no other bank. Why do they have sole authority? Why monopoly it has? So that in case of inflationary gap and deflationary gap, inflation, depression, the central bank can control and expand. They can put more currency in the economy, they can withdraw the currency from the economy, so it has the complete control. So remember the first 2 points, the central bank is the only bank in the country that issues currency notes. It has the sole authority over issue of currency notes, though coins are issued by the Ministry of Finance, but ultimately central bank puts them into circulation. That means it has got the complete sole control over the currency. So the second point relating to this, it has monopoly over the currency, so no other bank can issue currency. That means it has complete control over the currency. The next point, you have monetary liability. See, whenever the central bank issues currency, it becomes the monetary liability of the central bank. What exactly is monetary liability? Monetary liability means whenever the central bank issues the currency, it's a kind of promissory note. They are making a promise to the people. That's why the currency notes, you find it, I promise to pay the bearer a sum of rupees 2000. It's written on the 2000 rupee note. What it means, the central bank always, so it's liability of the central bank whenever they issue currency in the economy, they always back up the currency in terms of gold or in terms of foreign exchange or in terms of other stocks, securities by the central bank. So that people have complete faith over the currency. So whenever the central bank issues the currency, it becomes the monetary liability of the central bank. The next point, you have monopoly. We discussed it. It maintains uniformity in the currency. Why complete authority? The central bank has the complete monopoly over the currency, so that we have uniformity over the currency. Not all the commercial banks are issuing the currency notes, then you won't have uniformity in the currency. It leads to a lot of confusion. So it maintains, it has uniformity over the currency all over the country. And the next point, central bank has the power to introduce new currency in the economy. So recently you must have seen 2000 rupee notes. Earlier they were not there, maybe some 5-6 years back. So the government, the central bank issued the new currency. They can issue any number of new currency notes. They can issue new currency. So the moment they issue the new currency, it becomes a legal tender. It becomes monetary liability to the central bank, and automatically people have to accept it. And withdrawing currency from the circulation. What it means, if the central bank wants, they can withdraw any currency from circulation. You must have seen a few years back, the central bank, there was a demonetization of currency. The central bank withdrew 1000 rupee notes, and the central bank also withdrew 500 rupee notes. In place of them, they introduced 2000 rupee notes and new 500 rupee notes. So they withdrew 1000 rupee notes. So that is it. So now once again we discuss the function. The first function of the central bank is issue of currency authority. What issue of currency authority? We learned 4-5 points in this. So first point, remember, the central bank has the sole authority of issuing currency in the economy. All the currency notes are issued by the central bank, though the coins are issued by the Ministry of Finance, but central bank only puts into circulation. It means the central bank has the complete control over the currency. So we can call it as central bank has complete monopoly over the currency. Monopoly. Why do they have sole authority of monopoly? So that central bank has the power to take away or put more currency in case of inflation and deflation, excess demand and deficient, deflationary gap, inflationary gap. It has complete control. And why central bank has the sole authority? So that there will be uniformity on the currency. Otherwise it leads to a lot of confusion. And the next point is central bank can issue new currency, and the last point is central bank can demonetize. That means they can withdraw currency. I repeat once again, we're discussing the first function of central bank, that is called sole authority of currency. Central bank can issue new currencies. Central bank can demonetize, remove old currency. The central bank has complete control over the currency, and central bank has this monopoly over the currency, and it takes a legal tender, and it maintains uniformity over the currency. So that's all we have time for the first function. Wait for the next video for the next function of the central bank. Till that time, it's goodbye from Saddam Hussein. Work hard, because there is no substitution for hard work till we meet.